Welcome to the mission. Today, we're decoding the Nifty. Is it random chaos or a strategic map? Let's pull back the curtain and find the path to profit. In this digital ocean, the big players, FIIs and DIIs, are the whales. Their billion-rupee moves create the waves that we must learn to read and ride with precision. Foreign institutional investors bring global capital, while DIIs like Indian mutual funds represent our homegrown strength and structural stability in the market. Tracking their flow requires stealth. Like a radar, we monitor every move. Always check Gift Nifty. It provides early clues from the global stage before we open. Every evening, the market leaves a breadcrumb trail, a data dump showing exactly what the whales bought and sold. This net value is our primary sentiment indicator. To understand the future, we must look at the past. Historical trends and newspaper briefs give us the perspective we need for today's high-stakes trades. Positive net value signals bullish confidence, meaning institutional money is flowing in. Conversely, a negative value is bearish, signaling that the big players are exiting. Keep an eye on India VIX, the fear gauge. For the real-time battle, we turn to the option chain, the map where market fortunes are made or lost every single minute. The option chain lists all the bets, called options. High open interest at specific prices tells us exactly where the big money is participating and setting up camp. High call OI acts as resistance, a digital ceiling the price struggles to pierce. High put OI acts as support, a floor where traders bet the market will find its strength. The Nifty typically bounces between these walls. Use the open interest data to identify your own support and resistance. These are your primary battle lines for the current session. Now the pure tech. Use RSI to spot overbought zones above 70. VWAP is the true intraday average. Above it, the bulls lead, below it, the bears drive. Watch for MACD crossovers for momentum shifts. The golden cross, when the 50-day average crosses the 200-day, is the ultimate signal that the bull run is back. Price moves need volume to be real. Without it, a breakout is just a trap. We also check PE and PB ratios against historical averages to ensure we aren't overvalued. We filter for quality using ROAS, showing efficient growth. Manage your exposure across market caps, large caps for stability, and smaller caps for higher growth potential. Ethical leadership is an invisible indicator of success. Top broking houses are setting targets that suggest a healthy structural upward trend for the Indian market. Motilal Oswal remains optimistic with high targets. Nomura provides the global perspective, watching the FII flow shift across Asian markets with a keen eye. Angel One highlights momentum picks for intraday setups. These insights help us identify the trend and spot potential reversals in the Bank Nifty index. Banking is the market's backbone. Watch for Bank Nifty breakouts to clear resistance. A move there will trigger a massive short covering rally across all sectors. Pharma remains our defensive play for stability. Energy is the third sector to watch, as we track commodity impacts on giants like Reliance and NTPC. In pharma, watch Sun Pharma for a technical breakout. In banking, HDFC Bank remains a key pick with strong historical support holding the floor. Reliance shows strong momentum with key support holding. Always track mutual fund activity. Rising stakes often precede long-term bull runs in quality stocks. We track MCX levels for gold and silver. Rising commodity prices can signal inflation, which puts pressure on the Nifty's overall structural growth. AI is transforming fintech and e-commerce. To stay ahead, you must lead the tech download and plan your trading scenarios with cold, analytical precision. If we gap up, don't chase. Wait for a pullback. On a gap down, check support walls immediately. In a flat market, be patient and watch the range. Nifty's outperformance against global peers signals structural strength. Don't ignore dividends and bonus issues. They are the engine of your portfolio's total return. Trading near the 52-week high indicates powerful momentum. Beyond the numbers, always verify management integrity. Ethical leadership is the core foundation of success. See the market as a matrix of data. Our deep dive into the RSI oscillator shows the true momentum. Avoid the peaks and buy the troughs for consistent gains. The MACD zero-line cross confirms our trend. The 200-day moving average is the ultimate support wall. As long as we stay above it, the bull run is alive. Recapping our 3-step master plan. Identify your levels using OI. Plan your open scenarios carefully and always prioritize risk management. Rule 1. Never trade without a stop loss. It's the only way to protect your capital. Discipline your sizing. Never risk more than 1% on any single trade. Master your psychology. Trading is 90% discipline. The Nifty way forward is clear. Structural growth is intact. Trust the process, follow the data, and trade smart.